Back with Markets at Lunch, and you're catching us live from the Suzlon studio here at ET Now. Time to keep going with the earnings conversations and the management. You've heard from the management of ABB before the break. Time to now put the spotlight on Kirloskar Brothers. We've got Ms. Rama Kirloskar, joint MD at Kirloskar Brothers, joining us on the show. Ms. Kirloskar, hi, good afternoon, and good to be speaking with you. Thank you so much for your time. You know, it's been a steady quarter for you once again. While revenue growth both across your domestic and international businesses have been steady, you've seen some pressure coming in on the margins this time around. Should we be looking at this as a temporary cost issue, or is there a structural shift in the margin profile?
So good afternoon. Thank you for having me. So this is a temporary issue. We are modernizing some of our plants, and that took a toll on some of the dispatches. That's purely the reason why this has happened. But if I were to talk about the consolidated revenue, it has grown by around 13%. And growth was supported by strong execution across both domestic and international businesses. We operate at the nexus of food, water, and energy, so the opportunities are limitless for us. As far as domestic revenue is concerned, it increased by about 9.6% year on year. We have recorded a healthy growth in our made-to-stock retail business. Sale increased by 14% year on year. And this made-to-stock business essentially caters to small homes, small farms, as well as small industrial units. The other segment that caters to growth is our building and construction segment. The order book has again grown by 14% year on year. Indian cities have a rapidly increasing skyline, and KBL specializes in pumping, boosting HVAC and firefighting systems for high-rise buildings. Globally, our pumping systems have been supplied to buildings such as the Burj Arab, Burj Khalifa, Marina Bay Sands, Singapore, walkie-talkie building, to name a few. So we are qualified globally. We have the requisite certifications and standards, and are qualified with global majors here. We do see this as one of our key growth drivers. The other growth driver is data center. This is a significant opportunity for us in India. However, India is still in a very nascent stage compared to some of the other geographies that we operate in. So it's difficult to quantify the opportunity. Countries like the United States, for example, have close to more than 3,000 operational data centers, and we are also qualified there with all the global majors in that segment. The third segment I would like to talk about.
Yes, please go on.
The third segment that I'd like to talk about also is our defense sector. We supply high-performance pumps for marine applications, specifically for the Indian Navy, for frontline warships, stealth frigates, as well as destroyers. We've already supplied to certain projects such as the 17A stealth frigate project, as well as the project 15B class destroyers. So we are already qualified. We have proven track record. Our sale in Q1 has increased by 93% year on year because we've been able to develop a very high-end, high-performance exotic metallurgy at our foundries, which the Navy prefers. I'd like to also highlight that we are a very foundry-intensive company with the capability of casting more than 121 different metallurgies for various fluid applications.
Okay, understood, Ms. Kirloskar. That answers multiple questions from my end, because my next one to you was going to be on the data center segment, but you've spoken about your outlook over there. So moving ahead, Ms. Kirloskar, your order book has crossed 4,000 crore rupees for the first time. How much of this is executable over the next 12 months? What is the translation into revenue going to look like? And more importantly, does this give you the confidence of delivering double-digit growth in FY27 as you have aimed for?
Well, like we've always said, we strive to achieve that double-digit growth. And almost 2/3 of this order board or more we should be able to execute in this year. I'd also like to highlight one aspect is that this order board does not contain our retail business, which is close to 50% of our revenue, which goes into, again, the made-to-stock business, small homes, small farms, and small industry units, because they're off-the-shelf products. And I'd also like to highlight about our oil and gas segment. What has happened in the Middle East is very unfortunate, but it does open up opportunities for KBL to become a facilitator, to make operational many of the assets in the Middle East that have come to a complete standstill. And that would include infrastructure, water systems, energy assets, and industrial facilities. We can contribute a lot in these spaces. One aspect which we have been speaking about in our earlier investor calls have been the pumps we have recently developed for retail petroleum applications. There were essentially two foreign companies that were globally supplying these retail petroleum pumps, which we have been able to design and manufacture indigenously. And this has contributed to about 218 crores until the end of Q1. So this is another large growth driver because that opens up even export markets for the company. Apart from this, other capital goods sectors are also doing well. We've got significant orders for municipal water projects, irrigation projects, as well as orders for thermal power plants.
Okay, understood. And Ms. Kirloskar, let's talk about some more segments. Water and irrigation continue to be your largest business. Now, with the government's continued focus on water infrastructure, how strong is the tender pipeline? Where are you seeing your biggest opportunities? Is it in India? Is it overseas?
So we do see a large pipeline in India, and we are hopeful that those will not get delayed, and they will, it should end up in a healthy order booking for us in the near future.
And you have also guided for international margins to recover by the third quarter. Are you still on track for that? And what is the status on overseas profitability to return to those FY25 levels?
So like I said, we are modernizing a lot of our facilities and enhancing the capacity to meet this kind of demand. And that will translate into higher margins for both the domestic as well as the international companies.
Ms. Kirloskar, you've also spoken about the kind of scope that the company is seeing when it comes to the marine and defense order book. And now these segments have grown very meaningfully for you in the quarter gone by. Could this become a much larger revenue contributor over the next few years, especially with how the government is looking at its defense push? If you can help us with a percentage of the overall pie that could come from these segments?
It's very difficult to give a percentage and to quantify it because many times, these are government orders. So many times they're delayed. For example, they're not always on time as predicted. But we are the only Indian company in this space. So we do expect to see this as a large growth driver for us.
Okay. And, while we're talking about your segments, you remain optimistic on nuclear power as a long-term opportunity. Have you started seeing meaningful inquiries or orders in this segment? And how strong of a medium-term opportunity could this be for the company?
So as far as nuclear is concerned, we have developed all the products for the primary and secondary circuit. And therefore, we are in a very good position for this new SMR, reactors that we're going to set up and privatize in India. We do believe that we will be one of the major players in the market, and we do think that this will have to be done very rapidly, specifically because of the carbon border adjustment mechanisms that have already come into place this year.
Understood, and sounding good on that front, Ms. Kirloskar. Thank you so much for your time. Good as always to be chatting with you. Thank you so much.
Thank you so much.